Hello to all traders and welcome back to another market review brought to you by Orbex. So we're looking at the CPI data, yesterday's reading as it came in year on year at 3.7%, which is an uptick of 3.2%, but nothing to be too alarmed about. This is without the core inflation. Core inflation did actually dive just slightly lower, but this of course is without food and energy. So with that being said, if we look at this time last year at 9.1%, it has come down quite dramatically at 3%. They're at 3.2%, but now coming up to 3.7%. Is this a cause for concern for the Fed, at least, as they are looking to really start raising rates one more time to get this 2% target of inflation down? But they could even wish that it's going to go lower. We'll wait and see, but because of that, we saw an uptick in the dollar yesterday and a not so good news for gold as it heads back down to 1900. We've got retail sales data later today, which is expected to be quite positive for the American economy. So this could actually drive gold even lower. After looking on the daily chart that we are doing, we've had 3 days of losses on gold. We were trading roughly about the 1920 area, now losing just over, just under $15 so far. So looking at the 1905 handle now before we start delving back down to 1900. But if we look on the charts, as I said, daily chart, we've got this kind of V-shaped recovery to the downside, if you're a bear at least. And we will be now tracking to see if we not only get a break of 1900, but if we get a confirmation like last time, and that will start moving back down to 1886, 1885, roughly around that area. But obviously the fundamentals are really driving the news at the moment and the charts. If we look on the 4-hour chart as well, we'll just go more deep into it. Not really using any RSI or MACDs at the moment, just simply looking at the price action on the chart, because so far, as you can see, we've seen this very choppy nature on gold. Since we had this spring in its step back from 1900, we went right up to 1950, got some heavy resistance there, especially on this false spike here. And then we started moving lower as well. So this is a big indication that price action will keep on moving to the downside, at least for now, until we get this kind of confirmation at 1900, and we'll see if that's going to have any kind of bearing on where gold is going next. So as I said, just keep an eye on the fundamentals, because these are the main drivers, retail sales and other US data coming out later today. We've also got the ECB interest rate decision, which is expected to stay at 4.25%. However, we are still looking likely that the euro dollar currency pair might start moving a bit lower as well. So as you can see here, we have had this tremendous downturn on the euro dollar, roughly shaving off over 500 pips in just the last couple of weeks. But are we looking for a slight correction now before moving lower? Well, the ECB interest rate decision and also the big news in the American economy is really the driving factor for euro dollar, obviously. So, but looking on a technical standpoint, we're just waiting to see if we're going to have some nice support at the last level that we saw, roughly about the mid 106 handle, and this can really start projecting price action to the upside, or is it just a slight correction? Well, if we look on the 4-hour chart, we're just seeing more of this kind of bearish channel moving in. I'll just remove these drawings so it's a bit easier to see. So we're just seeing now that price action is moving lower. Since we had this last push to the upside, roughly just above the 109 handle, we've had this really sharp sell-off of over 200 pips, which is really giving a lot of economists a different view on the currency pairs, at least. So we're nicely consolidating now. We're just waiting to see if this is going to have any kind of signal, any bearance on where we're going next. But obviously keep an eye on the American data coming out, European data coming out shortly, and then we'll see if that's going to have any effect on the price action and the signals of where we're going for the next few instruments that we've looked at. So that's all for today's market review. Thank you very much for joining me. We'll see what's going to happen, and we'll keep you updated on our Telegram and YouTube channels as usual. Thank you. So thank you very much for joining me, and we'll speak again next time. Bye for now.